Hello traders and welcome to the VantagePoint Trading Journal for today, Tuesday, June 19th, 2018. How you doing? We're going to show you how VantagePoint's been forecasting market movements and show you what you need to pay attention to today. We are focusing on Horton, DHI. What we've seen here is generally a slowly upward trending stock that put in these highs and then failed miserably. Now we have let's look at this on a even shorter time frame, and we have a short cross that happened all the way back on the 12th, and that was your move down. And now what you're looking at is you're looking at the predicted high and low is lower than yesterday's high and low. The neural index changed on that same day on the 13th from green to the red. That's showing short-term weakness. We have all three predictive differences, not only downward sloping. All three of them are below the zero line, all indicating bearish momentum and increasing bearish momentum. So what can you do? Well, you can sell the stock somewhere around $42, which is right about where we are, where we're playing this right now. I would put a stop up here at the 43 quarter-ish area to protect and mitigate losses. If you're playing this from the option side, just given the market conditions, I'm more comfortable selling credit spreads for a bearish play than buying a directional put spread. So one thing that we can look at is June 29th, 43.44 call spread. That is trading right here. It is trading, it's 20 bid at 33. So trying to sell that at 30 cents, that would be the play for us. That would give, your maximum reward would be the 30 cents that you receive in premium. The maximum risk is going to be the width of the spread, which is $1, less the premium that you take in, which is 30 cents. So that's 70 cents. So 70 cents of risk over 30 cents of reward, that's 2.33 risk to reward ratio. All right, so that is it for today. We will catch you later on in the week. Best of luck, and we'll talk to you then.